There are three types of fair value gaps that are high in probability and high in win rate. You will never look at fair value gaps the same way after watching this video. I only focus on those specific ones and ignore all others, and that's how I make my money off fair value gaps. Make sure to stick until the end, as the last one could be a strategy by itself and it has a very high win rate. If anyone needs one-on-one mentorship, check out the description. This is Mulham, and let's get into the video. Now, we're looking at any chart and any time frame. Now, a general rule would be the lower time frame it is, the more fair value gaps we're going to have, and the harder it's going to be to know which fair value gap is going to hold. I do have a whole video about which fair value gap is going to hold. Make sure to watch it. But overall, we have a lot of fair value gaps. This is, for example, a fair value gap. Why didn't it hold? And why this fair value gap is holding. Those are some of the questions that beginners and advanced traders are having. And that's my job in this video, to clarify and to tell you which ones are going to hold. Not exactly which ones, but I'll give you three types that most of the time hold, okay? And those are very specific. One rule that we can apply to all fair value gaps, that a fair value gap needs to be in a kill zone. So a fair value gap needs to be either created or mitigated or both at the same time in kill zones. So either in London kill zone or New York kill zone. Those are the two, as well as I do prefer for the fair value gap to be extreme. So in any dealing range, right? We have this dealing range, for example, this high and this low. I'm not going to be focusing on this fair value gap here when I have one here or one here. In those three ones, I'll be focusing more on the extreme ones because this would be the highest probability one. So applying those two rules, the kill zone and the extreme fair value gap, is already going to help you a lot. It's going to help you a lot, and it's going to filter out a lot of the bad fair value gaps. Now, the first fair value gap that I do really prefer, and I do take a lot of trades from it, is the second fair value gap. What does that mean? So when prices going up, for example, went up here, started coming lower, right? And what I was having is a fair value gap. I'm not going to be entering from this fair value gap. So this fair value gap here, what I want to happen is this leg right here is to come to the fair value gap. So you see price came to the fair value gap, started going up, and I do prefer to see a breakout structure, but I want to see after price mitigating the first fair value gap is a creation of another fair value gap. If I see this, this would be a high probability one. So it's going to be the second fair value gap after price hitting, reaching, mitigating the first fair value gap. This I'm not going to be entering from. This I'll be take, and this is going to be a high probability one, especially if it's, as I said, the extreme one in this case, and especially if this fair value gap is fully filled. So if price came all the way here and fully filled this fair value gap, then the creation of another one is going to be a very high in probability. So instead of taking the first one, it's going to be the second one. If you don't prefer this, then make sure to check out the second and third type, because it's going to be the first one most of the time. Now, an example of a second fair value gap is this one. What we can see here is this big fair value gap displacement, and after taking a liquidity level or coming into this fair value gap. So the first one is this fair value gap, right? And there was a liquidity level here. When price came to this fair value gap and took liquidity, so the fair value gap is right here. It came to the fair value gap and took liquidity and created a fair value gap. This is now an extreme fair value gap. So this fair value gap, price came to it and respected. This would be the second fair value gap, which means that this is a high probability one. And you see price came to it and reacted from it, right? Going lower. And you see huge move to the downside. Our sponsor, Blue Guardian, is the only firm that gives you a tool to protect yourself from hitting your max daily lows and prevent you from overtrading. And it is very simple to use. They also have a new unlimited time evaluation with low profit targets and no trading days requirement, so you can get funded in the same day. Blue Guardian is a pro firm that I trust and I recommend using. Use the link in the description below and use the code MOLHAM to get 10% off your next Blue Guardian evaluation. Now, if we don't take a look at this, right? If we just ignore this, or let's say you don't see it, or even if you see it. So let's say you see it, okay? This is going to be your second fair value gap. Now, if we just focus on this from here, this would be your first fair value gap, which is this one. And the moment that price reacted from this fair value gap, for example, here for the first time, did we create another fair value gap going to the lower side? No. price went up, we came lower and breaking structure here. Did we create a fair value gap while reacting from the first one? Yes, this is the one. And you can see as price came to it, it was really high probability one. This is your extreme fair value gap on this price action leg from here all the way to here. That's why this is now the highest probability one. As I said, it's the extreme one, and price came to it when? Kill zone, London kill zone, New York kill zone. That's why this is a high probability one. Even it was not created on kill zone, but price came to it on a kill zone, and this is an extreme one, and again in a kill zone. Price came to it. You see the reaction here. That's why this is a very high in probability. You see, very nice respect. It's the extreme one. Price came to it. Now looking at any time frame, if you just look for the second fair value gap instead of the first one, right? You're gonna see that it works most of the time. You see, this is one fair value gap here. Second, this fair value gap gets respected. Another fair value gap, even though it's not in kill zone. Another example of the lower time frame, in this case a 1 minute, second fair value gap, we can see that in this case price took liquidity here, started going up. We don't see any fair value gap that is created, mitigated, and created another fair value gap. There's nothing here except actually this one right here. Price came to the fair value gap but did not create another I would say fair value gap, right? Started going up, price did not come back to this fair value gap, but it came here. This is another fair value gap where price came to, did not go all the way to the extreme fair value gap. In this case, did we create a fair value gap on this price action here? We did not create a fair value gap, and let me zoom in, right? There was no fair value gap created here. And as I always say, the creation of a fair value gap tell you a story, and the lack of a fair value gap also tell you another story. What we see here is no creation of fair value gap. What happened after is price filling the whole fair value gap, coming to this extreme order block, creating another fair value gap. This fair value gap now is a high probability one, and you can see price came to it, started going up. We did not create another fair value gap all the way until this one, but price did not come back to it. But in this case, there was another fair value gap here. And as I said, the creation of fair value gap tells you a story. In this case, price came to this fair value gap, created another fair value gap. And you can see immediate respect to this fair value gap, and price came back to it again, slightly below this order block here. But mainly it came to the fair value gap here, started going up. And again, another mitigation of the fair value gap, started going up. This is now your second fair value gap. Again, price came to it, started going up. If we consider this as our first fair value gap, then this is our second fair value gap. And again, it's respected. If we consider this as our first fair value gap, then it created this fair value gap, right? This is our second fair value gap in this case. And again, respected. And you see, it happens over and over. Second fair value gap, it gives you more confirmation when entering of fair value gaps. Backtest it and try it out. Now, the second type of fair value gap is one that I've talked about before, but not in a separate video. It's really high in probability. It's all about, overlapping period arrays. I think now you have an idea about this. Basically, what I want to see is price going up or coming lower. It doesn't really matter. This is a bullish scenario. Coming lower, now we have price creating a high here, right? So this high, when broken, again, we have a breakout structure now. But while breaking this high, what I want to see is a creation of a fair value gap aligning with the high, or a creation of a fair value gap when the high is broken. This is a breakaway gap, or call it overlapping PD arrays, because we have an overlapping of what? A breaker block here, or an old high with a fair value gap. And some people call it fair value gap and breaker block. All of those namings are the same. So we have an overlapping PD array, which is a breaker block and a fair value gap. This fair value gap right here is a very high in probability. And a lot of time, even let's say we have a very small fair value gap here, right? This one right here. And if we go down, this is, let's say, where price went deep to, and we had a fair value gap here, another fair value gap here. Most of the time, if price comes lower, it's only going to come to this overlapping fair value gap, and it's not going to come to this fair value gap or this one. Most of the time, it will only come to the overlapping fair value gap with the breaker block or the old high, not this one and not this one. And why? Because in this case, we have a fair value gap and breaker block. So we have two things pushing price higher. On this case, we only have a fair value gap, and also on this case, we have a fair value gap. So price is not going to always retrace all the way down to the fair value gaps, a lot of people, and sometimes you miss trades, right? Thinking that price is going to come here or here. But most of the time, even if it's not in discount or premium, price will only come to the overlapping high and a fair value gap, or overlapping breaker block and a fair value gap, and it's going to react from here. Now, an example that happened recently is right here. So we have Asian session going up, London session manipulation coming lower, and we have, it looks like a continuation of the New York, right? And what happened here on this leg of the price action from here going up? What are some of the highs or lows that we have? We have simply this low and this external low, right? Those are the two. Now, price came lower, and did we have a breakaway gap, simply a low that is broken through with a fair value gap? Yes, we actually have this fair value gap that took the Asian low and this low. So relative equal lows were taken with a fair value gap. This tells me a story. Even though we have a lot of fair value gaps on this leg of the price action here, from here to here, how many fair value gaps we have? We actually have this one, right? And we have this one here, and we have this, the lowest one here, and we also have this one. Why did we go with this one, even though we have the extreme one all the way here? And why this one was not filled? The answer to this is the breakaway or the overlapping period raise. On this case, this is the very clear 2022 mentorship model, which is price coming lower, sweeping liquidity, right? Coming lower, market structure shift, and we have what? Overlapping. We have a breaker block and fair value gap here. So we could simply enter from the overlapping, and that's what happened here. If we look back in this, where did price actually react from? Looking at this, exactly at this level, exactly at the overlapping, and almost 50% of the fair value gap. So the overlapping of the low is almost at the 50% of the fair value gap, and that's where exactly price came to. This would be a sniper entry from here. Your stop loss when trading the specific fair value gap, it's not going to be going all the way at the high. No, because we know, or at least we predict, and we think that price is not going to go all the way to the fair value gap or all the way to the high. So only above the breaker block. So let's say this is your breaker block here. On the high time frame, it's going to be more clear. In the high time frame, it's going to be more clear. This is your breaker block. I'll just have my entry here and my stop loss only above the breaker block. So somewhere in here. That's it. And then target whatever type of liquidity you want to target, right? So this is the setup. Very high in probability. Only when we see a fair value gap created when taking a high or taking a low. Now, considering gold, and I noticed that this happens a lot and repeats a lot in gold. What we can see here is price creating this high, coming lower, and then consolidating here until taking this low, right? When taking this low, now, and you guys know a breaker block, we can actually consider the lows or the body, and this is our breaker block here. If we consider the body of the breaker block, right, from here to here, you can see that when price broke below, there is a fair value gap at the body of the breaker block, or the body of this, this low, the body of the candle overlaps with this fair value gap that broke below. And if you can see for a continuation in New York, what can we expect now? If I use the line here, what can we expect? Price literally came to the fair value gap on the overlapping and started coming lower. Now again, what happened here is price creating this low. And what happened when price came to this low? It created a fair value gap. When creating this fair value gap, what happened? Why I was not waiting for this fair value gap to be filled? The only reason is after knowing breakaway fair value gaps. Now I know that price will only come to this fair value gap and not this one. That's how you become a master of price action, right? Now you know that price will only come here and not all the way right here. And that's what happened. Price literally giving you a sniper entry at this level, and price keeps doing the same. Now again, we have this low and there is this fair value gap, and price came to it, but no big reaction from there. Only a small retracement to the lower side, but that's it. Now you should not be entering blindly, but only entering with lower time frame entries and confirmation. And again, this happened a few days ago where we had price coming up in this case, coming lower, And what do we have? A break of this low and this low. If we consider the bodies, either the body of those ones, right here, that's where price actually reacted from using the line. This is the body of the candle, this is the breaker block, and that's exactly where price came to. And remember that we had two fair value gaps, right? There is one here and there is one here. But on the higher time frame, this is all one fair value gap, and we could actually also use this overlapping as it's part of the fair value gap, or overlapping with the fair value gap. This happens a lot on all pairs. Look for lower time frame confirmation when price comes to those levels, and you'll see that if it's respected at the beginning and there is, for example, a lower time frame 2022 mentorship model there, or there is change in state of delivery, then you could take that one and it's going to be a very high in probability. And now, third type of fair value gaps, and this is my personal favorite, right? This is one that I've looked up before in the 3 ICT 2022 mentorship model. I mentioned this because I was actually talking about the best models, and one of those is really related to the one that I'm going to be explaining now. Why? Because the 2022 mentorship model is all about liquidity and fair value gaps, and today we're talking about fair value gaps. And part of this fair value gap that I'm going to be going over today, it has a liquidity. So simply what I want to see is on a bullish scenario, going up, coming lower, going up either a breaker structure or no breaker structure, it doesn't really matter that much, right? And then coming lower. In this case, what I want to see, this fair value gap here, either there is a low inside of the fair value gap, but not all the way to the 50%, or there is a low above the fair value gap. So simply, if there is a liquidity in front of the point of interest, in this case, a fair value gap, then that's a high probability fair value gap, either below it, above it, or inside of it, but not below or above the 50%. In a bullish scenario, for example, I want it to be above the 50%, right? Not below the 50%, and the opposite for the bearish scenario. So this is what I want to see. This is your framework. Simply, that's all I'll be looking for. When I have a liquidity inside of a fair value gap, it tells me that this fair value gap now is a high probability one. Now, I'm just going to go over a few examples for this case because I already explained it on my last video about the 3 ICT setups. If you want more examples, then you can go and check that video. But simply, always ask yourself this question. Oh, does this fair value gap have a low or a high inside of it? For example, we have this fair value gap that is created on the New York kill zone. Does this fair value gap has a high inside of it? And the answer is yes, there is this high in this fair value gap. And that's what makes this fair value gap a high probability one. And simply price came to it, immediately reacting from there. Now, if there is another high creating up here, will I be taking this? Only if I see a reaction from that level. Why now? Because this is already above the 50% of the fair value gap. But will I be taking this high if price came back to it? Yes. If there is a reaction from this high, I'll be glad to take it. Now, another example is, for example, let's say this fair value gap right here. What happened on this case? We wait for price to create a high inside of it, and that's where the high is created. Now, this becomes a very high probability fair value gap. And you can see sweep here, fair value gap respected, price going lower. Very, very nice. Very nice. And I can see, or I can find actually a lot of different examples. For example, what we're having is a fair value gap here, right? Two fair value gaps. The first one is fully filled. The second one is partially filled. What happened is we have this fair value gap. There is a low inside of it. I would know that this is a high probability fair value gap because this has a low inside of it. And as you can see, price came back to it, started going up. And again, there is another fair value gap here. And it's actually fully filled in this case. So I'm not going to be taking this low. But it happens over and over. This is a fair value gap, very small one that has a high inside of it. This is a fair value gap with a high inside of it, but this one is already above the 50%. So automatically, when I have something above the 50% in a bearish scenario, then it's a lower probability. Also here, what we're having is this fair value gap, and it doesn't have only a low, but equal lows. And that's why this fair value gap now that has the low inside of it is a very high probability. And you see, nice reaction from here going up. It happens over and over, as I said. Look for lower time frame confirmation, enter from them, and that's what I do 24/7. Simply focusing on those types of fair value gaps. Hopefully you guys like this video. If you do, then make sure to share this video with your friends and make sure to hit the like button, subscribe to the channel, and join the Discord, as I do a lot of live sessions there, live seminars, some education there. Make sure to join the Discord. This is Molham, and I'll see you in the next video.